Hey there, this is Mark from Caliber Home Loans, and today we're going to talk about down payment assistance programs for the state of Michigan. I get a lot of phone calls about this, a lot of emails, a lot of texts. People are a little bit confused about the program. The program has been around for a long time. I've been originating this particular program for pretty close to 28 years. So I thought it was time that we actually just pull the curtain back on exactly how the program works and try to mitigate some of the confusion out there. So let's go ahead and jump in. So we're specifically going to talk about the MSHDA program, which is the Michigan State Housing Development Authority, and their down payment assistance program. So the MSHDA program is through the state of Michigan, and they sell bonds in order to fund the down payment assistance that they lend to their borrowers. So MSHDA programs are available to help low and moderate income individuals and families, and it's really designed for borrowers with average or better credit and the ability to live within their means. MSHDA has helped individuals and families share in the American dream of home ownership for quite a number of years now. MSHDA have two sets of programs for home buyers. The first one is the MI Home Loan, and this is strictly for first-time home buyers or repeat buyers that are in specific targeted areas. So it would be specific cities within specific counties. And this is a down payment assistance program with up to $7,500. And there is also a non-down payment assistance option, which is at a little bit of a lower rate. Part of the MI Home Loan, they just came out with a new version of it called the MI Home 10K, where they've ramped up the down payment assistance up to a cap of $10,000, but it's only in specific zip codes in Michigan. So you got to check and see where you want to buy and if it's in that zip code. The other program is the Home Loan Flux program, and this is for first-time buyers and repeat homeowners looking for more flexibility in the guidelines when they're going to get a mortgage. This is a down payment assistance up to $7,500. And there is a no down payment assistance option also at a little bit lower rate. So in using one of MSHDA's down payment assistance programs, the amount of the assistance is in the form of a second mortgage. We call this a interest-free mortgage or a silent second. So the second mortgage or the down payment assistance is not a gift. It is an interest-free loan. The loan will be repaid back when or if you refinance the first mortgage or sell the home. So the first mortgage will be any one of the following. It can be a conventional loan, which will have reduced mortgage insurance rates when paired with a MSHDA program, an FHA loan, or a rural development loan. VA is not allowed to have this type of second mortgage on it, so it is not available for VA loans. Borrowers will need to qualify for both the first mortgage guidelines as well as the MSHDA guidelines. But typically, if you qualify with the MSHDA guidelines, generally you're pretty much good to go on the first mortgage. So I just want to show you what this looks like a little bit graphically. So this one is an FHA mortgage. So the mortgage amount on the FHA is going to be $147,283 on a purchase price of $150, and then we add, let's say we're getting the entire $7,500 as a down payment assistance. So your total loan amount is going to be $154,783. So that's more than what you're spending for the house. So just keep this in mind that at the point of closing, you're going to owe more than what the house is worth. So on a conventional loan with 3% down, same deal, $150,000 purchase. Your mortgage amount's $145,500, and then with the down payment assistance, you're looking at $152,500. And on the rural development loan, so now you've got a zero down. So rural development is a zero down loan. So you've got actually the mortgage amount for the rural development is $151,500 because now you have upfront mortgage insurance that they factor in. So after you add the $7,500 for the down payment assistance, now you're at $159,000 on a purchase price of $150,000. And I bring this up because it's important that you understand that you owe more than what the house is worth, And if you are planning on being in and out within 5 years or less, you really need to take a hard look and ask yourself if getting a MSHDA loan makes sense. It would depend on appreciation levels in that neighborhood and whatnot, but you need to have enough appreciation to cover both loans, and if you're going to use a realtor, pay the realtor commission. So I just want to go through the guidelines. So the minimum buyer investment for any of the MSHDA guidelines is at least 1% of the purchase price. So $150,000 house, you have to have at least $1,500 into the deal. Now this can be your money, or it can come from a qualified gift from a family member. Minimum credit score of 640. So this is for the MI home loan, the first-time homebuyer program. For all borrowers, and a 660 for manufactured homes on a lot, not in a park. Maximum debt to income ratio is 45%. If you are over 45% at all, MSHDA will not approve the loan. And then all adults living in the home must be on the mortgage and credit qualify. Full-time students are exempt. So this is where we have some issues sometimes. So you've got a married couple or a couple that are buying a house together and they want to use MSHDA, and one of them has a 700 credit score and the other one has a 620. We're not able to use this version of the program because both people would have to be on the mortgage and both of them have to have at least a 640 credit score. If you've got another family member or let's say you've got a kid that's part-time in school and living at home, they would have to be on the mortgage. So this sometimes does raise some issues. The rest of the guidelines is you can't have more than $20,000 in liquid assets, and this is only for the down payment assistance version. Income limits exist based on the property location and the family size, and the maximum sales price right now anywhere in Michigan is $224,500. And when getting a down payment assistance loan, you have to complete a homebuyer education class before you're going to get final approval from MSHDA. So for the Flux, the guidelines are almost the same, except that all adults living in the house do not need to apply. So if you've got somebody that doesn't qualify or doesn't want to be on the mortgage, that's fine. We can leave that person off, but we still have to count their income as the household income. So you still can't have more than the cap on a household income. Again, less than $20,000 in liquid assets for the down payment assistance program. Income limits apply. And then the maximum sales price for this program is also $224,500. And you must complete a homeowner's education class if you're going to take out down payment assistance. So when it comes to the interest rates, MSHDA sets the rates for the home loan, for the MI home loan and the MI home loan 10K. And they usually change rates maybe every 2 to 3 months. It just depends on what the general market is and how their bond sales are going. And then for the MI loan Flux program, those rates are more market driven and they can change every day. So you'd have to check. Now, once you're locked in, you're locked. But the Flux rates do change. Now, the Flux rates are also higher than the home loan rates because of the added flexibility of not having to add all borrowers onto the loan. The down payment assistance programs offer lower rates than the programs with down payment assistance. So sometimes it depends on where the general market is with rates on the first mortgages and depending on what your credit score. Sometimes it makes sense to go with the MSHDA non-down payment assistance because you get a better rate. And if you're putting less than 20% down on a conventional mortgage, you'll get cheaper mortgage insurance. So it just depends on the individual situation of the borrower. So a couple of sites that you need to know is MSHDA's website, and then there's a link for approved housing educators. So again, this is a great place to go to find a class in your area. In today's world, everything is done online. So you can take the class online. When you've completed the course, you'll get a certificate that you'll have to send to your lender, which they will include in your underwriting package that gets sent up to MSHDA. So again, I've been doing this for a long time. I'm very familiar with MSHDA. If you got any questions about MSHDA, or whether you think you qualify or you're wondering whether you qualify, please don't hesitate to reach out to me. You can call me on my cell, you can text me, or you can email me, whichever works for you. So again, I can't say how much I love the MSHDA program. I think it's a great program. It's helped just a ton of people over the years. I've done a lot of these. I helped a lot of people buy their first home and even sometimes their second home. It just depends on whether the program fits for you. So again, just reach out. Let me know what your personal situation is. If you got any questions, give me a holler, send me a text, whatever it takes, and we'll go through this together and we'll see if you qualify. Thanks a lot and have a great day.